Welcome to FinTech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. Today, we're thrilled to have Jonathan Awad here with us. He's the co-founder and CEO of Baselayer.
Truly think your phone is the center of the universe. And this concept of owning your identity will be really easy because it will be in your phone and it'll be as simple as an app. We have a very strong focus on artificial intelligence and machine learning, and yet we don't really talk about it because the point is customers don't care. What they care about is if you solve the problem. To come in with a very high sense of delusion, or else there's no point in even trying, and yet killing the ego entirely. So it's a delusion of long-term, this makes sense, this will work, it's going to be great. Killing the ego entirely is, in the meantime, I have so much to learn. How do I surround myself by people who are smarter than me? What do I suck at? Great. Rigorously, viscerally search for people who are great at the areas that I suck at. And then just ask them over and over and over again to give you as much feedback as possible. So the easiest path to funding, I would say, is to think through some sort of a problem where you can actually find like 10 to 15 early prospects who are interested enough in it that they would join the VC calls and talk about it to the VCs themselves. If you can't do that, then I think you're already kind of dead on arrival. Coming from Egyptian immigrant parents, where the entire time I was growing up, they're like, doctor, lawyer, engineer, that's it. So you do anything else, we'll love you, but we'll be disappointed. And the journey ensued from investment banking to starting a fintech, to going back to banking, to more fintech, and then more fintech and more fintech. I never expected it that way, but it just kept making sense. And really, it's my natural personality and my curiosity.
Here's a quick message from the Accrued Series sponsor. As default rates continue to rise and margins compress in lending, financial organizations are searching for solutions to combine that operational efficiency with innovation. Look no further, as LoanPro allows lenders to enhance their origination, servicing, collections, and payments using the foundation of a modern lending core. Check out loanpro.io to learn more about how over 600 financial organizations have modernized their tech stack with LoanPro. Welcome to Accrued, the FinTech Confidential series presented by LoanPro. In this series, we're deconstructing the complexities of lending and exploring compliance, optimization, modernization, and personalization through insightful conversations with the industry's best. I'm Ted Huff, and with my co-host Colton Pond, we'll be guiding you through the intricate lending world. Whether you're deep into LendTech or just intrigued on how the technology is reshaping lending, you're in the right place. Now, let's dive into another episode of Accrued. Colton, welcome back, man. We've been on a roll lately, and I love the fact that we just keep on chucking along with this thing, man.
Yeah, it's good to see you, Ted. You talk about the industry's best. We got one here today, so I'm excited to dig in with Jonathan, for sure.
Today, we're thrilled to have Jonathan Awad here with us. He's the co-founder and CEO of Baselayer. But his journey to this point is anything other than ordinary. Jonathan's been immersed in the financial world for many years, starting out in investment banking, where he honed his skills at one of the top firms like UBS. His expertise in M&A and fixed income wasn't about crunching numbers. It was about understanding the intricate dance between risk and reward, and the perspective would later prove invaluable. After those years in traditional finance, Jonathan shifted gears and threw himself into the world of fintech at Middesk, and later as a founding member at Oak North. He saw firsthand the challenges that businesses face when it comes to identity verification and fraud prevention. He realized there was this big gap, one between what financial institutions needed and what existing technologies could offer. That's where the idea for Baselayer started to take shape. Jonathan knew that the future of banking and lending would depend on more than just good algorithms. It would require a whole new approach to managing risk and verifying identities. So he set out to build Baselayer, a company that uses AI not just as a buzzword, but as an actual tool to provide real, tangible results. Whether it's preventing fraud or ensuring compliance, Baselayer is making it easier for financial institutions to trust the businesses they serve, and all thanks to Jonathan's vision and leadership at Baselayer. Jonathan, I am super excited to have you on, man. This is a place that is near and dear to my heart. And Colton, thank you, man, for bringing him on. I would love to understand, the things that you've seen and your perspective on what we're going to be able to talk about with Jonathan today.
Yeah, stoked for this. Jonathan, first off, welcome. I've been thinking about what I should share to welcome Jonathan on. And I was actually, Jonathan's a personal, really good friend of mine. Jonathan, so you're aware, Abby listens to probably half of the podcast episodes. This is one that Abby's going to listen to for sure. But I thought about the first time I met Jonathan, actually, funny enough, and it was at FinTech, about 3 years ago. Jonathan was working in another company, not important. But what is important is Jonathan's walking up with this box of t-shirts, carrying this box of t-shirts. And he's running through, giving out t-shirts to people. I'm like, cool, sweet, love the hustle. And he comes up to me, he's like, hey, I've seen you at several conferences before. You seem kind of cool. I want to meet you. I'm like, cool. He grabs my phone from my hand, taps it with his phone, saves his contact info, follows him on LinkedIn, follows him on Twitter, shoots himself a text from my phone saying, hey, this is Colton Jonathan. And he says, hey, we'll chat later. I got to go. And he's gone. And we don't say anything. He's gone. I sit there. I'm like, what just happened? Who is this person?
Whirlwind.
Little do I know that over the past 3 years that I've come to know Jonathan, one of the smartest and most intellectual people when it comes to how to build FinTech, what the future of FinTech looks like. So Jonathan, stoked to dig in with you today.
Thanks so much, guys. I really appreciate that. This best part of the day, best part of really the job is talking to people like you and learning a little bit more each and every day about FinTech. I love it. Obviously big shout out to our co-founder and CTO, Timothy Hyde too, for taking that bet on me and on us. And, 2 years ago, jumping into this and starting Baselayer with me. So, wouldn't be here without him, and excited to be here today.
Ted, on that note, this is an episode you should be prepared for going into left field and right field and around what that looks like. I know Jonathan personally, so I already have several ideas of where I want to go, but let's kick it off, Ted.
Jonathan, I did my best to cover your journey in FinTech, but I would love to hear from your perspective. How did you fall into FinTech, and what led to the experience that made you go, I've got to do Baselayer?
Yeah, my story, you mentioned it earlier, not expected, especially coming from Egyptian immigrant parents, where the entire time I was growing up, they're like, doctor, lawyer, engineer. That's it. You do anything else, we'll love you, but we'll be disappointed. And the journey ensued from investment banking to starting a FinTech, to going back to banking, to more FinTech, and then more FinTech and more FinTech. I never expected it that way, but it just kept making sense. And really, it's my natural personality and my curiosity and the building of a network just kept uncovering more and more problems that were interesting and exciting, and couldn't have done it without the community built around me.
Jonathan, on that note, what I'd love to do, I'm obviously very familiar with Baselayer. Loan Pro partners with Baselayer today to be able to provide more efficient verification through a wide variety of services. But give the audience context on the current state of the fraud and verification ecosystem, what that looks like, and what are the big rocks that need to be moved over the next 5-10 years?
For sure. So how we talk about it at Baselayer and with customers and prospective partners there's a whole world of known data and then activity and potential signals to create that known data base if we're just thinking about fraud. So there's, on the consumer side, really understanding bad known consumer identities that a lot of companies spent a ton of time and money and effort creating these large databases to track people, to write down a list of this social security number has been used before for nefarious purposes, this IP address, this device. So that's on the consumer side, very much a consumer-led driven kind of fraud protection. And then there's where Baselayer is really pushing the needle on, which is on the business side. And so historically, those two things have not been tied together. And we're trying over time to tie those things together where, especially as more and more small businesses are being formed every month, there's a lot more focus on this because B2B fraud is big ticket fraud, right? It's not a $5,000 loan for the most part. It's a $500,000 loan that could be taken and stolen. And so really trying to focus on, well, are there known banned entities that have been and have been used to defraud other folks? Let's start building that list up. And then who are the known people who maybe have worked at or owned multiple entities over time? Let's build that list up. And then what does bad look like? And that's on the activity and the behavior side. And so the current state of fraud, if you really take a step back, consumer, identity, device, IP, address, a lot of time, money, and effort has been spent on it. And then we're really focused on is on the business side and really trying to flesh that out. And the latest and greatest technology, fortunately today, has been helping us do a much better job.
Jonathan, one aspect there, you're spot on actually. So a lot of focus on the consumer side. What I love about Baselayer is expanding on the business side and what that looks like. In 2021, when I was at Sherv, I did a survey, 250 financial organizations focused on consumer. And what are their biggest challenges? The top one was fraud, right? Which makes sense. There's been a lot of resources since 2021, definitely focused there. What I love what y'all are doing is how do we reinvent the business side on the fraud side and decrease fraud and risk on business, especially in business lending.
It's so important, especially because for every one bad account that you lose money on from fraud, from credit loss, you need about 3 to 4 performing accounts to do super well to recoup that loss. So every one bad example, you need 4 to just recoup, and now you're behind. And so really just trying to focus on minimizing as many of those bad accounts, those bad losses, would probably make you significantly more money than trying to get way more leads from different channels. So the management system aspect of all of this, and of course we're excited to work with Loan Pro, is imperative. To really have a fine grip on your portfolio is so important, to try to see things ahead of time, to learn from those mistakes, and then to avoid it for all new onboardings.
As you talk about all these different pieces and how granular it's been on the consumer side for some time, and then bringing a lot of that same philosophy back over to the business side. As I sit here and I think, there's intentional bad doers out there, and then there are those who are bad unintentionally or due to circumstance. Help us understand how Baselayer is looking at these shifts as they happen and how you're staying agile enough to discern between the two, especially when working with the lenders.
The easiest way to think about it is the data is out there. And so what we're focused on is going from lender to lender, bank to bank, all of our customers, even government agencies that we've started to talk to, they all actually know so much information that there just hasn't been a way to comfortably transfer that knowledge in a way where it actually protects and is inclusive for the greater financial ecosystem. And so all of our products, our infrastructure, our company is built from the ground up with this concept of the activity of the business is just as important as the identity of the business. Mm-hmm. And the only way to know the activity is to connect everywhere they could possibly go together. And so from our perspective, there's never really been a modern attempt at a business credit bureau. And the best part about the credit bureaus today that you may know, Experian, Equifax, and TransUnion, who really from the ground up were built for consumer, that piece of, those types of data, that type of activity, they've created really simple systems of records that you could bring to the business world. This concept of a pull. You pull from them the consumer profile, the soft pull, the hard pull. That concept is so important for all types of not just fraud prevention, but credit loss, credit stacking, personal guarantees, all of these ideas that we know and all the lenders and bankers are so used to in the consumer side, it doesn't really exist on the business side at all. And so we've brought these very simple and yet effective ideas to the business world, focus on creating unique IDs per business. And we have every single business in America we have a unique ID for, and we track what that business is doing in a way that no one else does. The LexisNexis of the world, Dun & Bradstreet, and then any of the bureaus, no one's actually really tracking what the business ID is being used for, which is how we're solving for synthetic identity fraud, first party fraud, third party fraud in the business world. And that includes credit stacking intentionally. A small business owner may go to a different merchant cash advance, a different working capital line lender, all these different lenders in quick succession and try to take out lending. And that would be a great example of first party intentional, committing something wrong here where a lender wouldn't be happy about it. And the same exact mechanism to prevent that can be used to prevent synthetic identity fraud and third party fraud as well, of sharing activity data, asking for confirmed fraud, and then making sure that you're preventing credit stacking in real time. Bring all those pieces together.
Now let's quickly shine a spotlight on a game changer in the financial world, ClearingWorks. Simplify your financial management with a one-stop solution for all your AR needs and with a single login. Are you intrigued? Visit clearingworks.com to schedule your demo today. All of this stuff you just talked about, it's like, how do we expect all of these lenders and these financial institutions to stay ahead and continuously keep up on all of these different pieces and how it's changing? I'm like, that's just, my brain starts to go into that. And I'm curious on your perspective of how Baselayer really helps them through that process.
We'd say that the way that we're helping them through the process is building our products in a very jobs to be done basis, where we're going to a lender, the credit officer, the operations lead, the product lead, engineering lead. And we just try to understand their job, the policies, the credit box. Really and truly, who would you like to serve? How do you best find new leads? Is it marketing channels? Is it ISOs? Is it, direct? We really just get in the weeds with them. We understand their process, and we just come in as ideally helpful solutions consultants, quite frankly. And then as much as we can optimize, we do. And along the way, we're building up our activity base to be the first universal database of business identity and activity. And that helped prevent all of the losses and the restrictions and the fear of working with the smallest businesses, the youngest businesses in America that really are the base layer foundation of society.
Love it. So Ted, buckle up. This is where we go in left field. And because I
figured it was.
I'm dying to ask Jonathan because of how much I know about Baselayer and the impact y'all are doing. Jonathan co-founded Baselayer, Tim, a year and a half ago, about
almost 2 years now. Yeah.
Let's go. A few aspects that I love to ask any fintech founders that we have on. One, over the past 2 years, give us the 2 to 3 really key highlights of learnings from what you've gathered and insight that you would give to other folks listening, thinking, hey, I have this idea. I'm wondering if I take a jump and start my own company. Let's start there. And then I want to talk about funding and fundraising and what that looks like, because you are the master of funding and what that looks like.
I don't know if I'm the master of funding, but we've been very grateful for all the people that have backed us so far. I would say a few of the highest order priority learnings would be to come in with a very high sense of delusion, or else there's no point in even trying. And yet killing the ego entirely. So it's a delusion of long-term, this makes sense, this will work, it's going to be great. Killing the ego entirely is, in the meantime, I have so much to learn. How do I surround myself by people who are smarter than me? What do I suck at? Great. Rigorously, viscerally search for people who are great at the areas that I suck at. And then just ask them over and over and over again to give you as much feedback as possible. And then the third thing probably is that advisors get a bad rap, I think. I don't think you should have too many advisors, but certain people can really unlock 30 years of learnings for you a phone call away. And so the number one person I would say has been unbelievably helpful for us is Eric Woodward. Eric Woodward was the founder of Early Warning, EWS, eventually created Zell Risk. He was the managing director of Bank of America, who led the deal to create EWS, was on the board for 4 years, was president for 11 years, has worked with every compliance, identity, and risk fraud company who's worth its salt. Shout out particularly Centrelink, big fan of that company. And he has helped us tremendously, and he's been huge. So I would say a recap, you have to have the strongest sense of delusion possible, or please don't even try. Next is kill the ego. If you can't take feedback, you're going to fail immediately, probably. But if not, and you raise too much money, a slow death. And then the third is really try to seek out people who actually can fill in your gaps, but be serious to yourself about that, right? It's very few people, most likely. But when you find those people, be generous and build a great relationship. I'd say those 3 things.
I would probably say the best advice we've received from a fintech founder so far on 18 episodes or some number, Ted. The number keeps growing, so I'm not sure. The second part of my question, though, Jonathan, is right now, if you look at the VC environment, the funding environment, there's a lot of companies who are like, hey, do I start my own company and raise? I need a raise. What does that look like? Give us your take on VC fundraising, what that looks like, what the next wave of that looks like, because it's not like 2020. I can guarantee that's not the case, and how folks should approach fundraising today. Yeah,
to zoom in on pre-seed seed, because I do scout for a few funds. So whoever sees this and feels like randomly talking to me about fintech or APIs, but focus on fintech, really focus on it. I focus on infra, don't do as much in application layer. So whoever watches and feels like talking to me, feel free. Pre-seed seed, I actually, on the weekends, I have about 7 different people I'm working with casually for fun to just go from -1 to 0. And we just talk once a week on the weekend, Saturday or Sunday, a half hour to an hour, depending on how much they actually want it. And a few of them in the past 6 months have come up with an idea and a company and a name, and have developed, kind of an MVP. I think today, if you're not following the easiest path to get to funding, and I'll outline what that path is, then you're just asking for luck to be the majority of what you're working with, right? A lot of great philosophers talk about luck and skill. There's luck involved, but it has to be focused on skill for the most part. So the easiest path to funding, I would say, is to think through some sort of a problem where you can actually find 10 to 15 early prospects who are interested enough in it that they would join the VC calls and talk about it to the VCs themselves. If you can't do that, then I think you're already kind of dead on arrival. That's the number one thing. The second thing is, for sure, 2 is great, 3 is best. Omri, the co-founder and CEO of Routable, said that to me 2 years ago, the first time I met him, when he told me to quit my job and start a company. Shout out to Omri. He motivated the heck out of me. In the first 10 minutes, he's like, why aren't you a founder yet? You're being scared. Quit your company. Start a company right now. And it took me a year to do it, but shout out to Omri for that. He said 2 is great, 3 is best. The 2 is, a CEO, someone who likes thinking through sales, ideally also product. And then the other person is someone technical who can code. if you can code some sort of an MVP, something, and get something signed with like, hey, if this was more fleshed out, I would pay you this amount of money. That immediately brings you up to the top kind of quartile. And if you can actually have someone commit to paying you some money, and they do give you some money before you even raise, which sounds really hard, and it is really hard. But if you can do a few of those things, you immediately climb all the way up to the top. I would say those things, step 1, step 2, if you can get to even step 2, try to get to an accelerator. If you're not trying to get into YC, you should at least try. It's super, super, super helpful. YC immediately brings you up to the top. I think a lot of the accelerators right now, super helpful. A4 Capital has a founder in residence program. I'm very close with A4. Shout out to A4. That's a great program. Just an idea, sometimes not even an idea. They'll take you for 3 months, give you $150,000 to work on a problem, and then hopefully you raise your pre-seed round. And they're the biggest pre-seed fund in America, Chapter 4. So it's things like accelerators, but really it's like find the team, find some problems, make sure that people actually will join the calls. It's a little bit of a cliff, but not that hard if you try hard. Ideally code something, ideally get some sort of like a templated contract. If you use Stripe Atlas, they have tons of templated contracts there. Just use a templated contract to incorporate your company. Shout out to Stripe Atlas. To incorporate your company. They have templated contracts. Use that. Get someone to sign something, to commit to something. If you deliver something, and then go try to fundraise. I mean, that's a really solid path. I also very strongly recommend a memo, not just the deck. The memo shows clarity of thinking. VCs love to read a memo because what is their job, right? We're always thinking jobs to be done focused. Their job is to write a memo. So write the memo for them. And that's obviously super helpful. So it's like, write the memo, ask another founder who has a memo, what was their memo? One of the best memos I've ever read was Footprint's memo. Shout out to Eli and Alex. I'm sure they both wrote it, but Eli, CEO of Footprint, wrote such an incredible memo. You're reading this and you're like getting excited. Like I got excited from reading his, and he did such a great job. Obviously, was great at fundraising. It was from Index and QED. He's great at it. So I would say that's probably the easiest way, even though it doesn't sound easy. Other things, if you're not a second-time founder, didn't go to Stanford or work at Stripe, I mean, like
Stripe,
really,
PayPal, any of
you're just going to struggle. You are. It is what it is.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
For the most part, they say we're looking for non-consensus. That's not true. They're looking for consensus. Consensus looks like Stanford, Stripe, Ramp, right? One engineer, one product manager. If you're that, you're not even listening to this podcast probably because you're busy fundraising. But if you're not that, I would say do the steps I just outlined.
Jonathan, one of the things as you were talking about this and all of that is amazing guidance that the audience is. If you didn't write all of that down, don't worry. We've got a transcript you can pull that right out of. But the big piece that I didn't hear you say, and I'd love to get your perspective, is how important is it for a startup founder to focus in on targeting VCs and investors that understand their space, does that increase success? Does that make it more difficult because they understand it better? Like, what is, from your perspective, would you take a fraud product to someone who looks at infrastructure, or an infrastructure product that someone always looks at the sales organization? Like, help us understand that perspective from you.
For the most part, the main thing is the main thing. It's one of my favorite quotes. So the main thing is pre-seed seed. Does the partner connect and like you? Do they believe in you? Because sometimes being super deep in fintech, they have preconceived notions and they're like, actually, I don't think that's going to work. And then sometimes being not in fintech at all, they're like, I have no idea what you're talking about. But then sometimes the opposite. Sometimes being super in fintech, they're like, I've been waiting for this exact thing. And then sometimes they're not in fintech at all. And they're like, wow, well, I believe you. You painted a very clear picture. Sounds like you could execute on that picture. And it sounds like if you did, it'd be pretty big. So the answer really is, ideally, you've been able to casually meet some VCs over time, as much casual as possible, right? Ideally, you've met some people just at like birthday parties or like random conferences. You just kind of say hi, you make a relationship, you become friends. They start to like you and just you. And then ideally, you have a good background. AKA, you've worked at some sort of good jobs, you've done well. The people at your company would say great things about you because they will background check you, and they will often blind background check you so that you're a high performer where you are. And ideally, you write a great memo, and you reach out to Jonathan and, go through the boot camp that I throw on weekends. And I rip your memo apart and reconstruct it for you. And then ideally, by the time you tell a few people, how do you actually raise a round? You go to angels first for sure. And then the angels, ideally later stage entrepreneurs, exited entrepreneurs, they'll know some people. And then some people, they know some people, they believe in you personally, they like the idea, they should know it super, super well. They open up some doors, and then word gets out, and ideally you run like an actual process, right? There's very much an art to this, not a science. So my time doing this, I don't think it's as simple and cut and dry as just go to fintech or go to non-fintech, actually.
So one, all roads lead back to Jonathan. Come to Jonathan to span up a topic. However, two, I want to dig into one aspect of what you said early on the fintech advice and advice for founding a company.
Yeah.
Go in delusional, but kill your ego. And what I see a lot of founders struggle with is they have a vision of why they started a company, and they get certain customers that say, hey, I want this, or I want this, or I want this. And oftentimes, sometimes that does align with the broader vision, but oftentimes those are roadblocks, short-term wins to be able to get revenue and money. How do you think about prioritizing those requests and what those look like, and product roadmap based on long-term vision versus short-term needs?
I think where people fail is a lack of strategy. So one of the greatest books ever in on strategy is Good Strategy, Bad Strategy by Richard Ramote. It's an incredible book. I would just listen to the audiobook. For folks at home who are like, I don't read, I go on TikTok. That's totally fine. Listen to the audiobook because it's a great audiobook. And you can just go for walks. I recommend them. And just listen to the audiobook. And so for the most part, strategy would dictate that you need some sort of a kernel of a good strategy. And so, Colton, your question on, well, what if people are asking you to they're constantly shifting your roadmap? Well, what's the strategy and what's the plan? So if it fits in the broader term and longer term strategy to have this exact client, because yes, you're not making much on margin, but you are getting a lot on activity data, kind of talking a little bit about like our business, for example, there's margin, there's earned access data, there's privilege access data, there's activity, there's all these different things. And so who we focus on and what we're doing, it's all about the strategy of our business. We care more about activity than anything else. Furnished data, giving us back the data, right? Loan repayment history, fraud data, confirmed fraud, all these things would dictate us to focus on the clients that can give us the most of that. Even if sometimes the clients are like, well, I need this specific thing. If it's a very large one and they're strategically aligned and we're on the same page and they can give us a lot of what we really care about in strategy, then it's fine. If it's not, if it's a flashy revenue, but actually kills the longer term strategy, which is where people trip up all the time. Short term one on revenue, super distracted on building, super distracted on everything else. The idea of fundraising is for liftoff, not for runway. So you really need to think about liftoff and how does this actually lift off your strategy, not just keep your runway going.
So there has been this fun strategy, and trust me, I'm going somewhere with this, but there's been this fun strategy of using .ai at the end of your URL to garner some attention. We very frequently known as AI washing. And it's been talked about by some of the regulatory bodies as being something to be worried about and really to dive into. I would love for you to share with us and the audience how Baselayer's approach is to AI machine learning, not only aligned to the essential needs of your customers, but how it's combating against the perception of AI washing.
You mentioned .ai. I think for the most part, it doesn't even make sense for most companies to have that domain. There's only one that's done it successfully, and it's obviously Sardine, and that's it. Everyone else that has like a .ai in FinTech, for the most part, I'm like, okay, this is a feature of an infrastructure. This is not actually a product. This is not actually a company. Like, this doesn't make sense for like a long-term successful plan. There's no strategy here. It's going to become part of something else. And so for us, we have a very strong focus on artificial intelligence and machine learning. And yet we don't really talk about it because the point is customers don't care. What they care about is if you solve their problems. And so once again, shout out to Tim, our co-founder CTO, sold his last machine learning company to a large Fortune 500. You know, it's 40 million monthly active users on what he built and the team built today. And for all intents and purposes, he did this 5 years ago. He's been in this for super long, right? But we don't highlight that as much because the point is customers just want solutions. How you get there, as long as it's compliant, regulatory focused, efficient, effective, and a great and delightful experience, they don't care what you're doing or how you're doing it. And so the companies who just say, we're an AI company, are not really saying, and as a result, we will solve this problem better, faster, cheaper, more comprehensively, and more thoughtfully with the better strategy than anyone else. They're not saying that. They're just saying we're an AI company. So actually, we've created an AI agent architecture as the foundation of our company because it's useful. It's useful to have an easy way to look up something, real-time scrape something, and then reason on if that something relates to the jobs to be done focus that we're trying to solve for. That's useful. That's not our company though, right? Our company is business identity, activity, risk, and fraud prevention. That's what our company does. So that's how we're focused on it. It's very much behind the scenes, and it's the reason why we are the best, fastest, cheapest, most cost-effective and efficient company on the market for what we do today. And certainly as a result of that.
Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
So on that note, as we talk about AI, as we talk about fraud, one of the big topics of discussion right now is the regulatory environment, what that looks like. Give us your pulse on regulatory aspects and headwinds and tailwinds, specifically when it comes to fraud and what the industry looks like.
The pulse there is there's been a big focus on FinCEN, on SARs, on beneficiary ownership. And then on actually data sharing amongst financial institutions, there was a big study that came out. The Treasury really came down hard on banks not sharing data amongst each other. There's 30 pages written on it from their report. And so this concept of beneficial ownership database, it's about sharing who owns the business. This concept of SAR, suspicious activity reports, it's really on sharing who's defrauded you. This concept of Treasury saying, hey, banks, you need to share data amongst each other about outcomes and decisions and bad events. And that all comes back to, if you look at, banking as a service, sponsored banking, a ton of these other areas of focus in terms of regulatory concerns. It's all on real-time understanding of who are you dealing with, what have they done before, what might they do in the future, and then not siloing any of that data in any one institution, so that there is a potential chance in the future one day of the financial ecosystem being faster than the fraudsters at innovating. I mean, this is fraudsters' full-time job, is all they're doing is what's the latest and greatest way for me to defraud and steal money, right? That's why there's a direct correlation with any application layer, fintech or lender or bank that increases marketing spend for the most part to leave their locality and try to get leads outside of their locality, immediate uptick in fraud. Because what a lot of fraudsters see is, oh, you're pumping in marketing dollars. That's your focus. You want more leads. You will look to convert more leads. And so we should attack here, because this is an opportunity to use the latest and greatest in technology, especially in synthetic identity fraud. In synthetic identity fraud's never been easier. All the hacks that have been happening left and right. There's been hacks of data. Everyone's data in America certainly is not just on the dark web, but it's cheap. An average file is like $20. Not that I've looked into or anything, but like it's very cheap. It's very easy to get. You both look like $25 files, right? And now I have your name, your address, your SSN, your date of birth. And that's very scary. So the regulatory concern has been on understanding who you're dealing with, what they've done before, and on sharing that data as a result of the latest and greatest in technology that are equipping fraudsters. So it all is kind of full circle.
I know, Jonathan, you're not in New York right now, and you may have accidentally left your crystal ball back in New York. But what I'm going to ask you to do is visualize that crystal ball there with you and look into the next 5 years, and based upon all the fun stuff that you're working on, all the startups, all the VCs, all the investors, all the community that you're part of, what do you see changing, evolving over the next 5 years, whether it has to do with fraud identity or maybe even other features around what these lenders, financial institutions, or other entities that are doing business lending should be paying attention to now so that they're ready when it happens?
Truly think your phone is the center of the universe. And this concept of owning your identity will be really easy because it will be in your phone and it'll be as simple as an app. Not many people know that there's an Experian app, right? The credit bureaus have apps. It's because the credit bureaus don't want you to know that necessarily, because they don't want you to own your financial fate and your future. They don't want you necessarily to be super connected to your score. They want to have some sort of layer of obfuscation. And I think 5 years from now, looking back, that will get progressively easier. Apple has a wallet and ID. The different states all across the country are starting to have these concepts of like digital IDs. A lot of companies are really focused on bringing into your hands your ability to impact your financial future, like a company called Solo. Georgina's the CEO and founder of that. That's where she's focused. I think 5 years from now, you'll see historically isolated institutions, maybe like FICO, the different bureaus, and Solo is also a bureau, be able to bring into your hands control of your scores, right? This concept of there is no score, are you a score? What is a score? Who knows? But really, like, what is impacting you? What is going on with your identity, and where is it moving and shaping, and who's using it? Once you have full control over that, and that's going to be like a complete paradigm shift, I think it'd be a lot easier to prevent fraud and risk, and actually be able to increase your chances of getting the products and goods that you need in real time. So I think that's a really cool future that's right in front of us. And it all ties back to the phone and, companies like Prove.com. Roger's the CEO. Love Roger. He is focused on the phone for a reason, because the telephone number is super important, probably more important than your social security number these days, because they use it for so many things and has access to so many things, and your phone is the focus of all that. So I think 5 years from now, we're already going touchless. Now it's going to be claim your identity via that same device. And companies like Solo and Prove are really helping with that.
All right, Jonathan, you brought up several things that I just I know that we're supposed to wrap, but I've got to touch. Yeah. I've got 3 rapid fire questions for you.
Sure.
You bring up a score, and if I go and score in 5 years or 10 years, is there still a score, or does it segment and personalize, and what different credit score looks like for credit underwriting?
Yeah, the future needs to eliminate just like this one score that the bureaus own. And Georgina talks about this all the time at Solo. You guys should have her on the podcast next. She's amazing. She always talks about this concept of you're more than a score. There is no such thing as a score. And the only things that are reported to impact your score are usually bad things. But what about all the good things? I mean, Colin's been a great friend for the past 3 years. I can't tell anyone that, right? He's amazing and doing all this volunteering on the weekends, and he's a great guy, but no one knows those things. It doesn't impact really how you're treated when you go to get a mortgage, when you go to, apply for an apartment. If you just look at only your, experience score or whatever, or the bench score, then it doesn't really take into account if you have a gambling problem, or like if you go to church every weekend for the last 5 years, or if you're perfect at paying all of your employees as a founder of a company. So you need to be more than a score. It has to be a lot more personalized and more customized. And banks and lenders can't exactly talk to you about like, hey, if you did this better or different, you can change your score. And a lot of this is stuff Georgina and I talked about. So that's my take on that.
One of the things I respect the most about you is how big your network is and how many people you talk to. You like talking to people like I like talking to people. Give me 2 to 3 fintech companies that you're just in love with and are poised to actually make an impact that people that may not know of.
The first one that comes to mind is certainly a company called Knot, Knot, so notapi.com. The co-founders, Rory and Kieran, the O'Reilly brothers, both Thiel Fellow, Harvard dropout, sweetest people you'll ever meet. The parents are super sweet. Amazing companies. They are seeing as well into the future of there's so many cards. How, if you sign up for a new card, can the issuer of that card make sure that they're top of wallet? And then how do you actually own where all the cards are being used? Subscription management, like this concept of the tendrils of society that you've touched with all of your cards. How do you own that and control that? Because very often you'll just, have all these cards and no idea what's going on with them. And that unlocks a lot in terms of spend and LTV and tons of things that banks are loving. And they're working with some of the biggest banks in America, some of the biggest fintechs in America, big fan of them. I'd say that's number 1 for sure. I mentioned Solo. They're number 2 easily. And then number 3, I think that there's a lot in the market today that's really exciting in loan management systems. Loan Pro, obviously, is my third.
I was expecting
company.
you to say Baselayer, but I'll accept Loan Pro.
I'll take Loan Pro. I like that.
We got to take Loan Pro. What I like the most about Loan Pro for sure, and I've met so many people at the team, is culture is top down, and Rhett is a force of nature. Yeah. He is incredible. I mean, rapid fire, thinks faster than almost anyone I've ever met, and he's so hungry, and he's been hungry for over a decade at this point. I can't tell because he feels like he just got started. And so meeting him inspired the heck out of me. And the team cares. I've never met so many people in one place who actually care about the job and are going to grind late night and do their thing. So, yeah.
Let's go. I love that last one. Thank you for that. Last question. Give me your hottest, most controversial take in FinTech right now.
The hottest, most controversial take is probably...
Get spicy, man. Get spicy.
Come on.
It's controversial only if you're part of the group. If you're not part of the group, it's obvious. The most obvious is that the 2021, 2022 big fundraises, we're about to see a bloodbath kind of come in 2024, 2025, 2026, when you just haven't grown into your valuation. And especially if you're past like Series B, Series C, the multiples are super low. You know, a hot Series C, Series D company is raising at like 5 to 10x revenue if you're hot. So if you haven't grown into this outsized valuation, it's going to be really sad. And for the most part, when you do raise at this crazy valuation, for the most part, you're hiring like just the wrong people who think the job is finished. So you're hiring people who are like, oh, wow, this is the hot company, we're done. But no, really, that's not the case at all. If anything, you need the opposite of those people to grow into it. And unfortunately, when you have all this cash, you just have to hire super fast. And you take people who flock to you, and people who flock to you usually think that this is the hottest company in the room, and they're not there to roll up their sleeves. And so it's this constant cycle of negativity that ensues of like missing targets. The people who joined were people who were like, ooh, we're missing targets. What's going on? That's not what I expected. And instead of saying, let's fix this, they're saying, let's fix this. I'm leaving.
Yeah. And then I'm gonna fix it for me by leaving.
I'm gonna fix it for me, which is just sad at the end of the day, because I love startups so much. This is my life. Could have gone into private equity and just done what my parents wanted me to do, but that's not who I am, and I don't like that. So just care about startups, building, growing, the team, jobs. I mean, that stuff is all I do. It's fun.
Last year, I spent I went to a KBW event last year, and that was when everybody was talking about the changing the conversation from saying it's a down round to we're at a reset point where the valuations are resetting. It's not that we're a down round. We're just resetting the valuations based upon what's reality. And then this year, the conversation is just like what you were talking about is, okay, now we've started to have these resets of the valuation. We now need to start having a reset of talent.
Right.
And so it was kind of that move next on, and which has started to raise a lot of questions around, do we start doing acqui-hires in order to fix the culture? Do we use that type of a thing in order to bring in that hungry perspective that you talked about? And so that's something that I've been seeing a lot lately, and I'm loving that we're in alignment on that.
For sure. But the cycles come on and move on, and this happens every 8 years or whatever the number is, 7 or 8 years, and it's expected, and we just have to learn from it.
Well, Jonathan, like, this episode is absolutely nothing what I was expecting. It is so much better than what I could have expected. So I appreciate you hopping on. The perspectives you brought for the FinTech founders, your approach to AI and all of the fraud and all of the tools that you guys are bringing from Baselayer, man. I am super stoked to see how Baselayer just blows up even more than it already has. So thanks again. I appreciate you being on today.
Thank you for having me. This was fun. Thanks, Ted. Thanks, Colton. Appreciate you both.
Jonathan, thanks so much for the insights, dude. Ted, I told you'd have to buckle up, go from left field to right field to second base and all around. But Jonathan, thanks for the insights, man. It was awesome to have you.
Well, that's another episode of Accrued by FinTech, presented by LoanPro. If you've made it this far, make sure to go ahead, like, subscribe, share, all that other fun stuff. And don't worry, Jonathan hit so many great companies. We're going to go ahead and drop that in the show notes so you don't miss a beat. And thanks again for joining us. And as always, keep moving forward. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords, they're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.